Hi, I'm Mark Deshane with HealthLifeDentalInsurance.com. And that beautiful couple there, those are my parents. And they're going to show you why you need to do one thing, and that's prepare for your future and make your emergency plan today. My family story will help protect your future. That's my dad, Ray. He brought me into this business 30 years ago, and he always said, help other people get what they want, and you'll get what you want. I want to help you get what you want. And I want to share with you what happened to them so that it doesn't happen to you. One day, my father got out of the car with it in gear, and the car took off his Cadillac down my street, hit 3 other cars, and wedged into a tree. And he called me, and he was embarrassed and scared, and we had my dad and mom checked out, and they had early onset dementia. That's the day we knew that we were unprepared. It changed everything. They lost their house, they lost their dignity, they went into the welfare system, and they ended up losing their lives into the worst possible conditions. My parents always thought they had more time to prepare, but they didn't. So our mission, my mission, is to help individuals and families like you preserve your financial and physical quality of life so that never happens to you. It's at the heart of everything that we do and I do. So I want to prepare you now to enjoy the future that you deserve. And I am committed to helping you plan for every part of your future. I can show you small, simple steps so that my family story doesn't have to be your family story. I have a proven strategy to outperform health insurance alone. And with these easy, small, simple steps, I'm going to show you how you can afford your future. The simple truth is that healthcare costs are the single biggest expense we face as our journey towards retirement. The average couple needs hundreds of thousands of dollars to survive, even with Medicare. And that doesn't include the hundreds of thousands of dollars that you're going to need for long-term care per person. That's a staggering amount of money. And even if you have it, you don't want to reserve for it. Wouldn't you rather be golfing in Ireland or on the beach somewhere instead of saving all that money for doomsday? I want to show you how when you're under 65, you can protect yourself from, here's the problem. Healthcare is far outpacing every other sector of our economy. It's becoming more and more expensive and harder to afford. That's why we have a healthcare crisis. So I'm going to show you how to dodge that. I'm going to show you the hack for this. You need more than an insurance card in your wallet. You need a strategy. So let's talk about what's truly important for you. What's truly important is access to care, actually being seen and cared for by the best doctors and hospitals. What is important is for you to not only medically recover, but financially recover so you have a life to go back to after you recover. Your plan must be sustainable. You're not magically cured at the end of the year. So you've got to have coverage that lasts year to year or a plan for that. And you need an agent to help you and hold your hand along the way. Without that strategy, your individual healthcare options are really kind of bleak. You go over to healthcare.gov, that's what the government wants you to do. Buy one of their crappy HMOs that no doctors or very few doctors accept. You're going to pay out the nose for it. Thousands of dollars a month for families sometime. Group plans are great if you can afford one or if you have access to it. They're wonderful. And I'll talk to you about that later. A group plan is part of my strategy. But you don't want to buy into these plans until you need to. And, lately, I hate to say it, the Christian sharing plans have kind of been preying on people because their insurance is so expensive. But what people don't realize is because there's no guarantee of payment, every Christian sharing plan you'll sign up for says, this is not insurance. We don't guarantee we'll pay a dime to a doctor or a hospital. The doctors or hospitals want you to personally guarantee it up front and pay them. So they really are reimbursement plans and they are not insurance. You need a strategy. So it forces you back to, hey, I'm going to look at insurance. Well, some of the lowest cost plans, here's a family of 4 in San Antonio. Oscar was $916 and the best plan out there was Blue Cross Blue Shield at $2,200 a month. Why do you want to pay these crazy high rates if you're healthy? Don't be trapped in an HMO that few doctors take on top of that. Now that there's no penalty, let's bank on your good health and opt out and just say no. That's crazy, because all this is going to do is pay your doctors and hospitals while it sucks you dry. It doesn't give you a dime to financially survive your illness. Okay? So once you're seriously sick, the hospitals get all the money, the doctors get all the money, but you don't get any money. You're probably not going to be able to financially continue to pay those crazy high premiums. And that may cause you to have medical bankruptcy or your business to fail because your cash flow just gets so poor. That's the problem we are going to solve together. This is what's facing us. We're looking down the barrel of a gun here. Our strategy is based upon 30 years of experience covering over 90,000 lives. It's designed for a currently healthy family who wants a better way. They want to maximize their coverage and minimize their premiums. And I'm going to focus on the most important things, the major catastrophe, which is at the top of our pyramid there. The everyday needs, you can pay them out of your pocket. The intermediate needs, if you want a gap policy, get with me later. I can show you how to cover that. But this purpose of this video is to focus on your medical bills and financially surviving that event. Our strategy, which is proven, is a combination of not only a short-term medical that lasts up to a year, but you have to marry it, here's the secret sauce, to a living benefit plan. You can't just have a peanut butter and jelly sandwich with peanut butter only, sticks to the roof of your mouth. You've got to have a living benefit plan here. The living benefit plan mitigates the financial cost of either dying or surviving that critical illness so that you can afford coverage beyond the first year. What am I talking about beyond the first year? Because the short-term medical plan lasts a year. Your cancer might last 5 years. You're not magically cured at the end of that year. So I'm going to take care of the initial sneeze, but your cold keeps going, and we need a box of tissues there. So we're going to have to continue to have coverage beyond the 12 months. That creates a pre-existing condition problem. So you're going to be forced back into the guaranteed issue market. And so, again, recapping, I'm going to give you $2 million of coverage. I'm going to give you coverage like it used to be in 2013 before Obama. You're going to have great access. You're going to be able to choose your doctors. And you're going to have the catastrophic protection you need to take care of the initial event. Then you're going to need a solution that goes beyond that. So that solution is affordable. So let's take a closer look at the initial short term again. Here's an example of a 40-year-old male, 40-year-old female, and 2 kids. I have plans that start at $225. There's an example of a United Healthcare plan that's $368 a month for your family. That is low enough cost to allow you to purchase or marry with it a living benefit plan that you otherwise could not afford if you were paying $1,000 a month for Obamacare. Okay? And not only that, these are the plans of the future. I guess you could call it Trump Care. Starting in 2020, he's created an income tax-free purchase under the new ICHRA rules. There's new HRA that's available to even buy a short-term medical plan now. So those rules kick in January of 2020. Normal circumstances, every year you're going to buy your short-term, 12 months is going to go by, you're going to get a reapply notice from us, and you're going to keep dodging that bullet and keep banking on your good health and keep having those lower premiums. But one day, all of us are going to experience a critical or chronic illness, and we need to be ready for that event. Because once that happens, that family member will not be eligible to reapply the following year, or at least they'll have a pre-existing, which means they won't be covered for that. We need a game plan for that, and let me show you. The game plan is not to go broke so that you can get strategy or subsidy over at healthcare.gov. That's not our game plan. And our game plan is not to raid your savings or mortgage your house or go into debt. The game plan is this. Here's what's going to actually happen. This is like the steps of what happens. The golden parachute strategy is this. If you suffer a critical or chronic illness while you're on a short-term medical, once your term expires, it will become a pre-existing condition. If it's serious enough to where it's going to cost a lot of money, your only option will be guaranteed issue coverages. And at that point, you'll have a choice of individual or group. Now, the individual plans are only available at the open enrollment period, which is normally like in December or at Christmas time. But small group plans are preferable because they're available year-round, normally the 1st or 15th of any month. And they also have better access to doctors because they're PPO versus HMO. But the small group plans require a bona fide employer-employee relationship, which can be as few as 2 people. So normally what happens is people buy the short-term medical. They think, nothing's going to ever happen. And a lot of times, many years go by and it doesn't. They bank on their good health. They save thousands of dollars a year on their premium. Wham, something happens. Well, put together a small group, start a bikini car wash, and boom, you're an employer. Then you can go back to the small group market, get a PPO, and that way if you're seriously ill, you get immediate coverage, no pre-existing, and day one you get a beautiful plan. It's magic. You dodge the bullet, you only buy into Obamacare, so to speak, when you need to. The only catch is it's expensive. These small group plans, and I put together dozens of them for people who've had catastrophic events, you end up spending, for 2 people, $2,000 a month. But $2,000 a month is better than the $1 million you're paying over to MD Anderson for your brain tumor. So we just need to make sure that you can afford that $2,000 a month, right? Here's how we do it. Again, it's the combination. Get the short-term medical, affordable coverage for the initial whack, lasts up to a year. Marry with it the living benefits plan. And let me show you what a living benefits plan does for you. Because what it'll do is it's your golden parachute. It is your piggy bank you smash open to get money. If you have a qualifying critical or chronic or terminal illness, here's an example of a 40-year-old man who got $1 million term life insurance policy. Unlike the term life insurance that you have right now, and by the way, you're probably already spending that, so maybe this isn't going to cost you anymore. You just need to reapply with me to get a new one. But in this case, he got $1 million policy for $67 a month in his good health. If he's terminally ill, like Alex Trebek is, they would offer him an early payout of $861,000. And you know what? Your plan probably does that. But today, very few people 90% of the people that suffer a heart attack survive that event. They don't die. But this plan pays off for not dying. You can have a critical illness or injury, and depending upon the severity, still get hundreds of thousands of dollars as an offer for an early buyout of your $1 million policy. So if you see there, for instance, category 3 severe, if you can see that, you can get $500,000 as an early payout on your life insurance. Or on this policy, you can get yourself $7,000 or $8,000 a month if you're chronically ill. Okay? Let's look at what those terms mean. The living benefit plan, like I said, allows you to collect a portion of your death benefit early while you're alive, in many instances tax-free. It provides a large sum of cash for being diagnosed with a chronic illness. Chronic illness can be a cognitive loss like dementia, what happened to my parents, or the inability to perform 2 out of 6 activities of daily living. Some people kind of confuse this with the long-term care policy. It's very similar. It functions the same way. If you can't take care of yourself by eating, bathing, dressing, transferring, toileting, or walking around, then you're considered chronically ill and you're eligible to file a claim. Critical illness. You see all those things. It's basically like heart attack, stroke, cancer, blindness, end-stage renal failure. You can read them there. The bad things happen to you, you can file a claim and get a lump sum of cash or a cash payout. Unlike old term policies that you have, now it's never been easier to get. Many companies, in just a few minutes on the phone or a few clicks of the mouse, you're issued with no exams, and you can even now get preferred rates without blood or urine. So I can make it to where no one even comes out to put you on a scale or pee in a cup. Approval is very fast, and in some cases even the same day. And that's going to protect you with that lump sum of money. Or you can cover your children that are over 18. And if you have children under 18 and you want to protect them with that lump type of money, I have critical illness plans for them as well. This strategy works. I've had dozens of people in the last 3 years alone who've had huge illnesses. This man was so impressed, he let me share his story. His name is Paulo. He told me, if anything happens to me, take care of my family. He bought a policy from me 15 months before his event happened. He thought he had the flu. He went into Texas Med Clinic, and it turned out to be non-Hodgkin's lymphoma. He's okay now, but it took a long time for him. He was on his back, so to speak, 5 or 6 months. He couldn't go to work. He got over half of his face amount, 52.2% of his face amount, as compensation. Now, you don't want to get sick, but if you're sick, at least it's nice for somebody to give you a large 6-figure check. And that made his family whole. It took the pressure off. It filled the gap of not working. And it gave him money to get his life on track and to start a new business. And, that's what we do. We take care of you, and we make sure that we put you with companies that will take care of you. That's his actual picture of him. So all I can tell you is that this does work. Which strategy do you want to do? Do you want to have health insurance alone that pays your medical bills and leaves you hanging out to dry to find the money to continue to pay it? Or would you rather bank on your good health, enjoy lower premiums right now, here today, and still be able to take care of your medical bills, have a death benefit in case you die? Maybe you won't survive that heart attack. But if you do survive that chronic or critical illness, make sure that you get a lump sum of cash or a bunch of cash to help you financially survive. I'll show you how to use some of that money to set up a small group so that you have perpetual health insurance and access to the best doctors as long as you need them. And all of this is half the price of Obamacare. I mean, half. Your emergency strategy and your protection plan is just a click or a call away. Schedule an appointment, go to my website, or give me a call. But act now and let me help you take care of what's important to you. Now that you're familiar with our protection strategy, it's important to think beyond 65. The protection strategy is tremendous. It saves you money. It makes sure you have a golden parachute. And it has a term policy with a large face that gets you out most of the time to your 70s. But you have to ask yourself a question. Do I want to be 70, 75 years old and lose my safety blanket? No, obviously not. And you don't want to have to keep working. There's Warren Buffett, one of the most successful investors and entrepreneurs in the world. And he said, if you don't find a way to make money while you sleep, you'll work until you die. So it's very important that you put your money to work for you and have an accumulation strategy. That protection strategy finds you such a savings that you've never been able to dream that you could actually save money. So looking beyond 65, we've got to have a strategy for your health and your wealth. And we need to provide protection for your ultimate needs up to the very end. So again, there's some simple steps that are affordable that we can take now because we really need to take care of ourselves. What are you doing right now? How is your nest egg looking? A recent survey showed that an alarming number of people have absolutely nothing put away for their golden years. That's why, as a tangent to the protection strategy, the accumulation strategy is here to help you. Like gasoline, if you don't put your money to work, it evaporates. So I want you to put your money to work so that later in life you don't have to. And there's really 3 things that you need for your financial future. You need to grow your money, and a great way to do that is through stock market gains. The second thing is you need to put your money to work for a long period of time and let that money compound with interest. And the third thing is you need to take taxes into consideration and make sure that the government doesn't get a lion's share of your hard earnings. The best way to avoid that is really to utilize an IUL policy. Warren Buffett again said, rule number 1 is never lose money. And rule number 2 is never forget rule number 1, don't lose money. So how do we get these market gains without market losses again? It's an indexed universal life policy. It's cash value, permanent coverage. The premiums are periodic, and you earn interest based upon the market segment you select. You're going to put your money inside a bucket, and these buckets are basically indexes like the S&P 500. You have cash value that can be accessed tax-free through withdrawals or loans. So you have access to this money when you need it. The potential upside on these policies can reach 15% a year. But what's amazing is, unlike investing directly in the market, you can't lose any money here. You're investing in an index. So if the market even drops 20%, you don't have any losses. So you get the upside, but with no downside. And that is how you stick to rule number one. Now, Index Universal Life, again, is the ideal accumulation strategy. The specific strategy is buying the minimum face amount, the minimum death benefit that you can do with the amount of cash you want to put in monthly. That way, you're buying the least amount of insurance and the most amount of cash is going to work for you. Remember, your protection strategy already has that big term policy in place for a premature death. So here we're talking about accumulating for down the road. The Index UL uses the stock market indices, as I said, to get upside returns without any market losses. And the combination of these returns, no losses, compounding over time, and tax-advantaged cash makes a super desirable nest egg. The potential results here are a 40-year-old healthy man who doesn't smoke, who saved $500 using my protection strategy, and investing it here into an indexed UL premium could actually have as much as $600,000 in cash value by age 75. You can achieve what you've only dreamed of, which is financial security in your senior years, made possible by the small, simple step of starting with our protection strategy. So, someone is sitting in the shade today because someone planted a tree a long time ago. Imagine that. To have the foresight to do something way back then that'll benefit you now, later in life. It's time that you get out of the sun and reach out to me today. Click to schedule an appointment, go to the website, or give me a call. Thanks.